Welcome back to ChainFinance. Today we're breaking down one of the most important concepts in smart money trading, a concept that separates professional traders from retail traders, a concept that defines trend, direction, reversals, and continuation. We're talking about break of structure and change of character, or, as traders call them, BOS and CHOCH. Understanding these two signals changes everything. But start with the basics. Market structure is the backbone of price. It shows whether we are in a trend or a reversal. A bullish trend forms higher highs and higher lows. A bearish trend forms lower highs and lower lows. But structure doesn't stay perfect forever. At some point, price will break something. That break gives us information. And this is where BOS and CHOCH come in. First, let's define break of structure. A BOS happens when price continues in the direction of the trend. In an uptrend, a BOS breaks above the previous high. That confirms the bullish trend continues. In a downtrend, a BOS breaks below the previous low. That confirms the bearish trend continues. BOS is proof of strength. It shows momentum is still intact. Professionals use BOS to time continuation trades. BOS also reveals where liquidity was taken. Because highs and lows often hold stop losses. When BOS sweeps a high, it takes liquidity. Then price can retrace into discount zones. That gives traders precise entry points. Now let's define change of character. CHOCH is the first sign of a possible trend reversal. It happens when price breaks structure in the opposite direction. For example, in an uptrend, higher highs and higher lows keep forming. But at some point, price breaks the previous higher low. That break is CHOCH. It tells you buyers are losing control, and sellers are stepping in. In a downtrend, CHOCH breaks the previous lower high. That signals a shift from bearish to bullish. CHOCH is the earliest reversal signal, but it doesn't guarantee a full trend change. It simply says momentum is shifting. Smart traders combine BOS and CHOCH for precision. BOS shows trend continuation. CHOCH shows the first sign of reversal. Together, they reveal the market story. Now let's break down how BOS works in practice. Price rallies upward. It breaks the previous swing high. That's a BOS. Traders wait for a retracement. Price pulls back into an order block or FVG, then continues upward. Simple, clean, efficient. This is how professionals catch continuation moves. Now let's break down CHOCH in practice. Price is trending up. Suddenly it forms a lower high, then breaks below the previous higher low. That's CHOCH. The trend may be reversing. Traders wait for confirmation. Price pulls back to retest structure. If the retest holds, reversal is confirmed. Now the market is shifting bearish. CHOCH gives the early warning. BOS confirms the new trend. This is the sequence professionals watch. CHOCH gives BOS gives trend shift. BOS gives pullback, gives continuation. This simple structure logic builds entire trading strategies. But context matters. CHOCH inside a range doesn't mean reversal. BOS inside consolidation doesn't mean continuation. Always identify the overall structure. Use multiple timeframes for clarity. Higher timeframe BOS is stronger. Lower timeframe CHOCH gives entries. Combine both for precision. Liquidity plays a big role here. Price often sweeps liquidity before forming CHOCH. Liquidity sweep plus CHOCH equals powerful reversal signal. BOS plus liquidity sweep equals strong continuation signal. Study these patterns on charts. Mark BOS and CHOCH zones daily. Watch how price reacts around structure shifts. Over time, structure becomes easy to read. You'll see where buyers lose control, where sellers step in, where trends end, and where new trends begin. BOS and CHOCH are more than patterns. They are the language of market structure. Understand them, and you understand the entire chart. This is how professionals see the market, with clarity, precision, and confidence. And this is how you start reading market structure like a pro.